Good morning and welcome to Stock Market Today and happy Friday, August 9th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opened. So U.S. equities finished higher in Thursday's trading after ending off the worst levels of the day on Wednesday in that session. All sectors were higher on the day yesterday. Treasuries were weaker with some curve steepening. The dollar was weaker versus the yen, stronger against the euro. Gold finished down 70 basis points following a big 4-day winning streak. WTI crude added nearly 3% on the heels of a 3-day pullback. It's interesting to note that the S&P 500 filled the gap that was open on Monday's open and is now actually positive on the week. However, futures this morning are down 60 basis points as of this recording. After that rally yesterday, actually yesterday's rally was the biggest in 2 months. Asian markets are mostly higher overnight, but China lagged. European markets are weaker this morning. Treasuries are stronger after taking a pause yesterday. The dollar is weaker against the yen and euro. Gold is up 30 basis points, and WTI crude is following through. That is adding 1.5% here this morning. Here's the S&P 500. Bounced off this 2850 support level that we've been highlighting, and it's now traded into the resistance zone between 2900 and 2950. As we said, futures are weak this morning, down about 16 points, so you start to see a little bit of a pullback here. We filled Monday's opening gap. And now we're watching the character of RSI for clues. We've talked about this a lot. Just to recap, when the market is strongly uptrending, RSI will tend to stay above the 40-50 mark and actually become overbought. That's confirmation. It's a momentum confirmation to the trend. However, when things get a little dicey, you get closer to oversold levels. And in a strong downtrend, you routinely become oversold and never really become overbought. Right, so that's what we're looking at now. Next steps on this market, we'll get our clues from RSI. If the pullback today causes the RSI to head lower and RSI eventually hits at oversold levels again, we have to start thinking about a trend change. Right now, it's too early to tell. It's still a mixed bag. But if you're bullish, you want to see the market move higher. You want to see the RSI get back above 50 and then hold above that level on pullbacks as it did through this rally. So far, we're not seeing that, but so far it's early. Chaikin money flow is bullish, so that is one positive. So the indicators at this point I'll call mixed, lining up with some volatile two-way trading for the S&P 500. Your market in a minute. Now, what am I talking about in my note today to Chaikin Analytics clients? Snapback rally continues as the S&P 500 fills Monday's gap. Semiconductors hold relative support, and that's important. A move higher from here and a breakout would be bullish. Growth breaks out relative to value. That we'll talk about why that makes sense. Medical devices are a leading industry and near oversold levels. I think you can go looking for some opportunities there. I think with the market environment right now, your best course of action is to really take your premium setups. If something's dicey, if you're not sure on a name, I don't think it makes sense to buy it. In this environment, premium setups are where you want to be for individual stock ideas. Now, let's look at the Chaikin power bars. They've continued to improve, but for the most part are still skewed in negative territory or bearish territory. Dow adds 1.5% yesterday, 8 bears to 6 bulls. S&P 500 adds nearly 2%. Still more bears than bulls, though. 102 bears, 93 bulls. NASDAQ outperformer. 26 bulls, 22 bears. So that one's positive. And small caps outperformed, up nearly 2.16%. 450 bulls, 359 bears. Bonds were a mixed bag yesterday. The widely watched bonds were mixed at best. Energy was the big outperforming sector yesterday, up 2.88% on the heels of Saudi Arabia talking about taking steps to shore up the price of oil. However, look at the power bar for energy. You've heard me pound the table bearishly on energy for months now. And yesterday's nearly 3% rally is not going to change that because look at the power bar ratio. 19 bearish or very bearish stocks, 0 bullish stocks. According to the Chaikin power bar, small cap stocks remain somewhat more bullish than large cap stocks. Major markets are mixed. Taking a look at the stock of the day. Another bank stock. Yesterday was a bank stock. Today's a bank stock. Triumph Bancorp, 29.70 close, up 1.09%. So an underperformer yesterday. TBK is the ticker symbol. Chaikin Power Gauge rating is very bullish due to very strong price volume activity, attractive financial metrics, and strong earnings performance. When we roll up the 20 factors, 5 in each of these 4 categories, we come out with a very bullish rating. Trend is strong, industry is strong. However, it's a mixed bag. Remember we talked about premium setups? This is not one of them. Very bullish rating, great. Underperforming. Looking for a personality change. If we started to see some outperformance, that might be interesting. Money flow's bullish, stock's close to oversold, bouncing around the long-term trend line. But look at the checklist. I mean, it's a mixed bag at best. Power gauge is there, but relative strength isn't. So right away, we kind of dropped this from consideration. Strong industry, great. But even from a timing standpoint, even if you wanted to buy this stock, it's just not there yet. It's not there. Long-term trend is down. Overbought, oversold is neutral. Money flow persistency, neutral. This is not a premium setup. A little bit later in the show, we're going to look at what a premium setup looks like. Taking a look at our sector tracker now, movement of the major sectors over the last 5 days. Still has a defensive feel at the top of the list. REITs and utilities benefiting from some defensive rotation as well as declining yields. Staples, remember, we've been talking about staples a little bit here, saying that their relative outperformance is gaining some traction, and we've been highlighting some ideas in that space. Materials, discretionary, and healthcare also positive, but middling. I'm kind of warming to materials. You've heard me say that. Going to start looking for some better opportunities there. Industrials, comms, and tech, along with financials and energy, are lower over the past 5 days. Energy, despite that big rally yesterday, energy is still at the bottom of the list. Financials, we've been warming to financials, but this recent drop in yields has thrown some cold water on that fire, and tech is obviously trade sensitive. Speaking of tech, though, NYSE Tech Services is our industry in focus today. It's over the past 6 months, it's been an inline performer at best, slight outperformer, up 58 basis points relative to the S&P 500. Power bar ratio, which measures future potential, is strong. 13 bullish or very bullish stocks for only 10 bearish or very bearish stocks. But you can see it's kind of ranked middle of the road, number 12 of 21 subsectors. It's moved up 1 slot over the past week. But if you're looking for ideas, very bullish stocks include Alphabet, better also known as Google, NXP Semi, NXPI, and Accenture, ACN. All of these stocks have very bullish Chaikin Power Gauge ratings. And if you want to talk about what a premium setup looks like, that is a premium setup, folks. Accenture, very bullish stock, strong trend, strong industry group, outperforming the market. Not only is its stock oversold, our indicator is oversold, but it's beginning to round higher within an oversold conditions. A lot of times when we pull down the checklist, you'll see this say oversold, but it'll be yellow. That's because the indicator is oversold, but still heading lower. A premium setup is when it's oversold, but beginning to round higher with bullish money flow above a rising long-term trend line that acted as support to the pullback. Stock triggered a relative strength buy signal today. And when we drop down the checklist, you can see it's green. Now, does this guarantee the stock is going to be a winner? No, there are no guarantees in the market. But do odds favor Accenture continuing to outperform the market based on this process? Absolutely. Is this a premium setup that's worth looking at in a choppy market environment? Absolutely. Notice how the stock held up. In May, when the market sold off, Accenture was an outperformer still. And even now, as the market is sold off, Accenture remains an outperformer. This is a premium setup, folks. Take a look at Accenture on the long side. Trending names now. Yesterday's S&P 500 gainers and losers are movers and shakers. AMD introduces a new chip. Stock higher by 16%. Symantec being bought by Broadcom, 12% to the good. Albemarle earnings sent that stock higher by 8.75%. Concho and MRO higher by 8% and nearly 7% respectively on that rally in the energy complex as crude lifted. Loser side of the board. Kraft Heinz reports earnings. Delayed, by the way. And they're going to delay their 10Q. Stock lower by 8.5%. CenturyLink reports earnings, stock lower by 7.6%. Perigo's earnings sent that stock lower by nearly 7% on the day. Fox A down 5% following their print, and Wabtec, WAB, catches an upgrade from Goldman Sachs yesterday, but the stock was still lower by nearly 4.5%. With all the macro headlines going around, sometimes we forget that we're still in the middle of earnings season. It should start to die down over the next couple of weeks. But, yesterday's surprises, Shinari missed by 59 cents. Activision Blizzard puts a beat up, 14 cents. There's that Kraft Heinz. They beat by 3 cents, but delaying the 10Q again did not make investors happy. Keurig Dr. Pepper beats by a penny, and CBS Corp beats by 3 cents, but some moving parts to the CBS story as news stories are floating about a potential tie-up with Viacom. Before the open today, bullish CLNY will report. Neutral stocks before the open, HPT and TRCO after the close, GWR. No bearish stocks reporting today. It is a Friday, so earnings tend to die down. And again, we're getting towards the tail end of earnings season. Next couple of weeks going to probably be quiet as people start to head out for August vacations. So let's talk about the charts here. Semiconductors hold relative support. You know the importance that I place on semiconductors. Here's SMH relative to the SPY. By now, you should be seeing this chart in your sleep, but it's that important. You can see that we've been in a pretty wide 2-year range, but this is a good leading indicator for the market. Right? We topped out ahead of the market here. Market fell. Now we found support above the 200-day moving average. What's interesting to me is this pullback. RSI stayed in bullish ranges. To me, this increases the odds that semis are going to continue to outperform, and that would be bullish for the market. And a breakout of this consolidation would be really bullish. Now, remember, semis tend to lead and lag the market on a relative basis, right? Topped out back in March, interim high in June before the market fell off a cliff in September. Bottomed in November before the market bottomed in December. Topped in mid-April ahead of the May drawdown in the market. Bottomed late May ahead of the June rally. You can see what I'm talking about. And here's semis on an absolute basis holding support so far. Right? So semiconductors, take your cues there. If semis start to outperform from here, bullish for the market. When thinking about where you want to be positioned, when you're looking for your premium setups, we still favor growth over value. Here's Russell 3000 growth relative to Russell 3000 volume, and after going into a small consolidation above support, has now broken topside to new highs. Notice the RSI of the ratio remaining in bullish ranges as the ratio remains in an uptrend above a rising long-term trend line. To me, the thesis here is simple. In a slowing growth environment, investors will pay a premium for growth. If you think about it, it makes sense, right? If growth is slowing, won't you pay a premium? Won't you go looking for what's growing? So to us, it makes sense that growth will continue to outperform value. And just for confirmation that we are in a slowing growth environment, look at the bottom of the chart. That's the copper to gold ratio. Copper is an industrial metal. Gold is a safe haven, or considered a safe haven. The line is declining, which means copper is underperforming gold. Copper as an industrial metal is broadly used throughout the economy. So if copper's weak relative to gold, to me, that's a signal that investors fear growth slowing. If investors fear growth slowing, we want to pay a premium for growth. So when we're looking for our premium setups, we want to skew our ideas towards the growth areas of the market. And we want to skew our ideas to the industries that are outperforming, like medical devices. Take a look at the IHI, the iShares US Medical Devices ETF. It has a very bullish Chaikin Power Gauge ETF rating, and it's a strong trend. Pull back to the trend line, held, and is now moving higher. Very bullish rating, outperforming the market near oversold levels. In fact, the overbought oversold indicator is beginning to turn before reaching oversold. Chaikin money flow is bullish. To me, if you're looking for long ideas, you want to break down the components and the holdings of this ETF and look for some of the better names that are premium setups within that group. Take a look at Baxter International, BAX, my bullish stock of the day for Chaikin Analytics clients here today in my morning note. That's going to wrap it up, everyone. Have a great weekend. ChaikinAnalytics.com/today. I will be back here on Monday.